Welcome, everybody. We've got another quick podcast for you. Hey, we've got our good friend Nathan Davis here from Community Lending. We want to talk quickly about mortgages. The Feds just did a new drop. Tell us what's going on. What kind of this Fed action, what does it mean? Is it ever going to stop? Are we ever going to get better rates? Give us an update.
Yeah. I mean, again, this is kind of where I try and always tell you when we're together. The Federal Reserve, what the Federal Reserve does doesn't have a direct impact on mortgage rates.
Right.
Okay, so Federal Reserve just raised short-term interest rates, Fed funds rate, by 1/4 point. So everybody who's looking out there in the news go, oh no, rates just went up for mortgages. In actuality, as we look right now, mortgage rates are starting to come down after that news. Right. They say, well, why is that? Well, again, what we're starting to see is that the Federal Reserve, they were taking big swings at this. They've been raising rates at a half, 3/4 of a point clip. I mean, they have been raising short-term rates for a while. Why? To curb inflation, right? They want inflation to come down. Well, by only doing a 1/4 point shot this time, it's a little bit of a signal that they're starting to see inflation come down. And as inflation comes down, guess what? So will mortgage rates. So that's what is being seen right now. Mortgage-backed securities are actually trading more positively after this news. So the good news is if this sustains, we should start seeing what we said was going to happen is mortgage rates starting to come down. I think I told you last time we got together, by mid to late summer, I think we're going to see rates probably around the mid-5s. Right now we're seeing 30-year fixed mortgages running around the mid to low 6s. Right. So we've got some room to go before we get where I think we're going to be. But this may actually be some good news for our buyers out there.
So you're predicting the housing market sustain itself? Do you think it picks up any better, or?
Yeah, you and I just were talking that, the cash buyers are still kind of, ruling out there. I think some of our mortgage buyers have been kind of sitting back and waiting, for prices to come down, maybe mortgage rates to come down. This is Southwest Florida. We know they want to buy.
Well, I've just pulled the data today, and so here in our zip code, and I'm not talking about, I know you're down in the Cape Coral area, but in our little area here, we still have 57% of the homes being reduced in price to still catch up on the market. Yeah. Now, some of that I predict is because we just come off the end of April, which means the last of the people here for the seasonal people have gone, which means that whoever was trying to sell their houses tried to lower their prices to try to catch the last of those last seasonal buyers that we hear to try to sell them. That's what I think happened, right?
Sure.
So you've got the massive amount, because we were sitting around 44% all season long up until now. In the last 2 weeks, last week we were at 55%, and this week we're now sitting at 57%. So I think we're at the highest we are trying to meet those needs. But I think that's good. I think that's the old inventory trying to get down to the right numbers. We are seeing that the price per square foot came down overall. We were sitting about $300 per square foot. We're at about $284. So we're seeing that kind of thing happen. If these interest rates come down, maybe we will see more stronger buyers. We know nationally that last week 80,000 new listings came onto the market, and 21,000 of the listings actually got sold immediately. So that was the first 2% move of new listings that came on the market nationally that we had all year long. So that was the first positive. And I looked at that national data yesterday, and we had 88,000 this week. So we're seeing that spring run of new listings come to the market, and that's the first that we're starting to see. So that's good news. We are still predicted, and I think I mentioned this last week, that we're still going to be short maybe a million homes being sold this week. And I think you guys everybody's down about 20%.
Oh yeah,
right?
Easily.
So we're still down. I mean, some realtors are doing fairly well. We're kind of holding our own out there. I think I told you we're kind of doing okay. But it's tough out there.
Yeah.
But the inventory is starting to peak up, especially here, and just like it is nationally, we're starting to get a little bit of a bump of inventory. Our buyers that are there, we have enough buyers for the inventory, so it is strong, and we're seeing that strength, hang in there. And just as you said, the buyers are cash buyers. Right now. But if this interest rate works, that's a good thing. Anything else you want to add on the interest rate and the mortgage front?
Well, even those who maybe have to buy right now, who don't have the ability to maybe wait for rates to come down a little bit further, I've been saying to our clients for the last year, you buy the home, you rent the mortgage. Why? Because there's a refinance opportunity that's going to happen in the next 24 months. As inflation comes down, mortgage rates come down. So don't look at your payment now and go, that's what I'm stuck with for 30 years.
Right.
We truly do anticipate rates to improve over time. So, again, if you've got to buy something now, that's fine. You're renting the mortgage. We'll get you refinanced in 12 to 24 months when it makes sense for you to do so.
So if you're buying now and it's 6.5%, it's going to cost you at least another point, right?
Yeah.
So you're going to be at that 7.5%. If you refinance at say 5.5, a real number, do you think it'll be a real number at 5.5?
I really do.
Okay.
I really think that we're going to see.
And do you think the cost of refinancing will be worthwhile at that point?
Yeah, I mean, depending on your loan size, but usually if, our average loan sizes are somewhere around 300,000.
There you go.
So you need to save about 1% in rate for you to break even on your costs in 24 months or so. So that's very realistic in what we're seeing.
Well, there you go, folks. You just heard it from the man himself. So if you could save a percent over the next 2 years when these rates come down, you get a chance to refinance. So don't hold back. There's some great inventory, fresh new inventory coming to the market. I know Jennifer and I are putting 4 new places on the market over the next week and a half. We're just waiting for our photographer and our stuff to get cleaned up to get going. I'm telling you, you're going to love some of the new stuff coming to the market. Listen, like, share, subscribe, take a look at what we've got. Why don't you give your information, Nathan?
Yeah, so Nathan Davis, Community Lending, 239-898-8841. Always catch me on my website at agentslender.com.
Hey, he's a real star. MyDigitalListing.com. Give us a look. We'll talk to you real soon.